Stock's taking a breather today from last week's big rebound, but my next guest believes the relief rally is here to stay. Let's bring in Ed Yardeni, president of Yardeni Research. Ed, good to see you.
Thank you very much.
Selling every 5% bounce this year has been almost as easy and reliable as buying every 5% dip was in 2021. Why do you think that might change here?
Well, I think the focus clearly has been recently on commodities as reflecting the very short-term outlook for inflation. And so I continue to watch commodity prices. They've been relatively weak over the past couple of weeks, and I think that's been one of the drivers of the relief rally that we've seen. I think that we're going to continue to see that commodity prices will be volatile, will continue to look somewhat as though they're peaking, and if that's the case, I think that should help a lot. Another very important factor for this relief rally has been sentiment. Sentiment has been absolutely awful. As a matter of fact, when the market bottomed a week ago on Thursday, it bottomed at 3,666, which, by the way, was 3,000 points above its 666 intraday low in the previous bear market. But what's fascinating is that sentiment, according to the bull-bear ratio put together by Investors Intelligence, is now as bearish as it was back in March of 2009, which was the very bottom of the bear market when the market was down by over 50%. And now the market, as of Thursday a week ago, got down 23%, and sentiment is as bearish as it was back then. So I think there's, from a contrarian perspective, things aren't that bad, and I think the fundamentals of the economy are going to continue to show the economy is growing, albeit at a slow pace.
Yeah, there's no doubt that we're seeing some pretty rare extremes in terms of negative sentiment, and have for a while, Ed, but you know what people will come back with and say, yeah, but we hit those types of levels in terms of investor psychology, in terms of positioning in 08, months and months before you got the ultimate low. And then naturally, somebody says, yeah, commodities are rolling over. Doesn't that mean we're in for a bit of a downside growth scare? So it seems like you're never going to escape on the other hand, with these calls.
Yeah, look, I think the relief rally is, I think the word is still relief. I think there's some more upside here. But I think we might have very well made a bottom at 3,666, and I think we could be in a trading range for a while. I think we could go a little higher here, maybe to 4,100 or so. But you're right. The problem we have is the market went down almost entirely on valuation, actually entirely on valuation. And here it's bounced from a low of around 15 forward PE a week ago to now around 16, 16 and a half. It's hard to imagine that it's going to go back up to 18 or 19 after all the agita that we've seen in the markets about valuation. So I think the optimistic side of me suggests that we may just kind of consolidate here for a while, that we may have very well have seen the low for this bear market. Ask me again if we go below 3,666. But again, I think the inflation story is going to show more signs of peaking. I think the economic indicators, like today's economic indicators on orders and pending home sales, will continue to show that there's still plenty of life in this economy.